Okay, guys. So yeah, today what we will do is today is the revision class day 3. What I thought is let's do the grade 13 first few parts. If you are a grade 12 student, no worries. We are doing only the grade 12 part today, not the grade 13 chapter. So you will also know how to do it. Okay. So we can start. Which of the following statement is or are correct in relation to financial statements prepared for special purpose? Okay, so if you take financial statements, guys, there are two purpose you can provide the output. That is, guys, you can say general purpose and special purpose. Special purpose is where, guys, you are making the financial statement only to satisfy a specific need of someone. Okay, you're not preparing for everyone in common. If it is general purpose, is you will prepare for everyone as a purpose. You're only providing it to satisfy a specific need of a person. Okay, for example, maybe the bank, you need a bank loan. Okay, you need a bank loan, so the bank is asking to prepare financial statement for them to see whether you're eligible to take a bank loan. So then, guys, you're only making the financial statement based on the need of the bank. So we call that as the specific purpose, the special purpose. You're not preparing for the general public. You're not preparing for the general public. You're preparing for the special needs of someone. For example, management is coming and asking the employee, management is telling, listen, I want to get insurance of this particular machine. A specific purpose. A manager is coming and asking for a specific purpose. Management accounting information, these are specific purpose. And financial accounting is usually the general purpose. That's how usually it is. Now they are asking which of the following is correct. Let's see. They are prepared based on financial year of a company, true or false. You all have to answer, because we will make it interactive. I want you all to reply. They are prepared based on a financial year of a company. Do you see a financial year to prepare special purpose? No. Yes or no? Is it true or false? True or false? Others, what do you think? Is it true or false? It's false, guys. You know why is it false? It's false because now I just now told it is prepared based on the special needs of someone. That means, for example, manager comes and asks today, listen, I need a financial statement. I need this, I need that. You will prepare whenever it is needed. It's not that there is a specific date for you to prepare. Whenever it is requested, you're going to give that information. So that is going to be a no. Okay, this is usually for general purpose financial statements, not specific purpose. They are prepared. They are not prepared based on accounting standards and laws. True or false? True or false? Quickly answer. They are not prepared based on accounting standards. Think and answer. They are asking for special purpose. This is not. Very good. It's true. It's true, guys. You know that special purpose financial statements, you are preparing just for a need of someone, because someone requested you're preparing. You're not giving it to the public. Usually this is management accounting, guys. Usually management accounting informations are special purpose. Okay, so you don't have to follow rules and laws in order to prepare special purpose financial statements. I'll tell you all an easy way to identify. I'll tell you all an easy way. Just remember it like this, okay? Just remember, if it is general purpose, think about financial accounting. If it is special purpose, think about management accounting. You will easily identify. Okay, now see, they consider historical cost information, historical and forecasted, true or false. Think about management accounting. As I told you, when they say management accounting, when they say general purpose, think about, okay, when they say special purpose, I want you all to think about management accounting information. Management accounting information. Okay, when they say general purpose, when they say general purpose, I want you all to think about financial accounting information. Easily you will correct answer. Okay, so please make sure you do like that. So now see, yes, it is true. They consider historical and forecasted information. You know, management accountants, usually they always think about the mainly future. Okay? Management accountants, they mainly think about future. Answer is third one. Answer is third one, B and C. Anyone who didn't understand there, please ask me quickly. Answer is third one, B and C. Okay, now let's go to the next one. Using the following information, use the following information to answer question 2 to 4. So they are asking you to use the following information so that you can answer question 2 as well as 2, 3 and 4. Now see guys, the accounting equation they have used, is they say asset, capital, liability, retain earnings. So they have said asset is equals to capital plus liability plus retain earning. This is the equation they have used. So that means guys, retain earning will include income and expenses. What is retain earnings? Retain earnings is where you accumulate profit. That means like accumulated depreciation. In accumulated depreciation, every time you go and record the annual depreciation, right? In retain earnings, you will go and record every year profit. Asking you to answer 2 to 4, right? When there is a connected question, you know what I want you all to do? Read all the requirement first, so that you don't waste time doing the question 3 times. Okay, you have to read all 3 requirements. Okay, the first one says what? The first requirement, they're asking you to do this. So I'll just put it here: assets, capital, liability and retain earnings. So that's what they are asking, right? Now go to second requirement. So what is the second requirement? Select the answer which contains source of January 1st to January 18 in order. So they are asking you to write the source documents for this in order. That is January 1st to January 18. That is everything. I thought it's in middle, that's everything. They are asking you the source document. So whenever we do each transaction, let's find the source document also. So that means we are finding 2 answers together without wasting time. Okay, let's go to the fourth one. The values of net profit and increase in net assets due to the above transaction. What does net asset means? Guys, what does net asset means? Anyone? What does net asset mean? Equity. Very good. Guys, net asset doesn't mean asset. It means equity, not net equity. It's equity. Okay, net asset means equity, or even, yeah, equity. Fine. Now say they are asking you the profit, and then they are asking you the increase in net asset. Increase means compared to the opening balance, by how much has the closing balance increased by. Okay, I think we can start the question now. Let's do one by one. So the first one is 1st of January 21. Okay, 1st of January 21. Now let's see. First one. Goods costing. So they have following transactions were carried out in a business during January 2021. 1st of January 2021, goods costing 30,000 were sold for 60,000 on credit. Now, guys, you're selling, the cost of the good is 30, you're selling it for 60,000, but not in cash, you're selling on credit. So what happens, guys? Your asset will increase when you sell. You're selling on credit, right? You're creating data, because you're creating data, your trade receivable. When you sell on credit, you create trade receivable, so you will increase your asset by 60. Why? You don't have to write like this in the exam, but I'm just writing for your understanding, because your trade receivable is increasing. Okay, what is the cost of the goods you're selling? The cost of the goods you're selling is 30,000. Because of that, your stock reduces. Stock is an asset. Go and reduce your stock, because your stock is reducing. Why? You're selling. When you sell, you have to give your stock away. Okay. So what's the reason for this reduction? Reason for this reduction is because of stocks are reducing. So I'll write the reason also, just for your understanding purpose. Okay. So now, guys, you're selling for 60,000, cost is 30,000. What do you call the difference? What do you call the difference? Hear me now? Okay, sorry about that. There was a connection problem, so I went to change it. Okay, so fine. Now see, there is a profit. Very good. So profit, where do you record? The profit should be recorded in the retained earnings. So what happens? Your cost is 30. You're selling for 60,000. Profit is going to be how much? Profit is going to be 30,000. So the profit will increase your retained earnings. Why is your retained earnings increasing? Because of this profit. Because of this profit, guys, your retained earnings increases by 30,000. Okay, so now let's continue. Goods sold. So this was the transaction first one. Okay, before that, let's find the source document. So guys, they are asking you to tell the source document for each of the transaction. Now guys, when you sell goods on credit, what is the source document? Anyone? When you sell goods on credit, what is the source document? Yes, sales invoice. The source document when you sell goods on credit is what you call as the sales invoice. The source document to sell goods on credit is what you call as the sales invoice. So we have found that. Now go to the second transaction. That is going to be 10th of Jan. Okay, let's see. Goods sold for 20,000 was returned by the debtor. These goods were sold on 1st of Jan. So guys, we sold goods, right? We sold goods here. So now they are telling they have returned how much worth of goods? 20,000 worth goods sold for 20,000 was returned. So that means guys, now you have to find the cost of these goods. They are telling goods sold for 20,000. Out of this 60,000, you sold for 60, right? You sold for 60. Out of this 60,000 goods which you sold, 20,000 worth of goods were returned. So that means guys, when it is returned, you know, when you sell guys, your trade receivable increase. Now if it is returned, your trade receivable will reduce. Okay, when you sold the goods, your trade receivable increase, but now it's being returned. So if it is being returned, your trade receivable reduces. Okay, now you have to find, guys, they are returning the stocks back. So we are getting the stocks. So what happens to our stocks? Our stocks will increase because we are getting the stocks back. Okay, our stocks is going to increase. So now we have to find how much is the cost of this stock. Our stock has to increase, right? We don't know. They didn't tell us, but we have to find. Can you all tell me how to find? How to find this increase in stock? I mean, how to find this cost of stock? Okay, before guys, we know that the cost of the inventory we sold was 30,000. Okay, and the selling price was how much? For that, the selling price was 60,000. So then can't you find how much is the cost for the goods you sold for 20,000? Can't you find that? See, it's half, right? It's half. See, this is cost is 30. Your selling price is 60. Now here selling price is 20 means what is going to be your cost? Half of it. Half. Very good. See guys, for 60 the cost is 30 means for 20 cost is going to be how much? Half of this, that is 10,000. Yes, 10,000. So what happens? Your stock increases by 10. Why? Because now they have returned it back. Because of that, your stock increases by 10,000. Now, guys, see, your profit will reduce. Before, when you sold, guys, the profit increased. Now, your profit, this is actually not a loss for us. This is actually the profit is reducing. Okay? Why? Because when you sold, guys, profit increased. Yeah, when you sold, profit increase. Now what happens? Your profit is decreasing. Your profit is decreasing. Now guys, let's find out. Okay, your profit decreases by 10,000. Now let's find out what is the double entry. I mean, what is the source document for the goods returned sold on credit? You have sold on credit. Now it's being returned. What is the source document? What do you call it as? Very good, Zahra. Correct. Others, what do you call this? Mubina, yes, correct. Amana, Afka, Ayman, correct. Good job. Shatisha, correct. Yes, you call it as credit note. Credit note. Guys, when you sell goods and if it is returned, what do you call that? You call that credit note. Credit note. Okay, so that is done. Second one is also done. Second one is also done. Now let's go to the third one. That is 14th January. 14th January 21. Okay. Now let's read it. 4,000 from debtor was set off against creditor value. Guys, you are making a set of entry. What is a set of entry? When an individual is a debtor as well as a creditor. When an individual is a debtor as well as creditor, what you can do is, guys, you can set it off between each other. Why should you keep a same person? Why should you keep him as a debtor as well as a creditor? Okay. Why should you keep him when he is the person who should pay you as well as you should pay him? Example, you should pay him 4,000. He should pay you 4,000. The same person, guys. Why should you keep it like that? You can set it off, right? You can set it off between each other. Both of y'all owe each other 4,000. So y'all agreed to set it off. So when you set it off, what happens? Your asset reduce because you are setting off debtor, right? Because of that, your debtor reduces by 4,000. It is an asset, so asset also reduces by 4,000. And then where do you record the balance? Your creditor, your liability also reduces by 4,000 because your trade payable is also reducing. Guys, when there is a set of entry, trade payable as well as your trade receivable reduces both. Okay, trade payable as well as your trade receivable both will reduce when there is a set of entry. When there is a set of entry. Now say me guys, what is the source document for this? What is the source document to record set of entry? What is the source document? Very good. Journal voucher. Guys, you don't have anywhere to record. You don't have anywhere to record. So you will go and record it in the general journal. What is the source document to record general journal? Journal voucher. Journal voucher is the source document. So right here, guys, right here, journal voucher. Journal voucher. Okay. So this is what you have to record the set of entry. If guys always remember, when you have nowhere to put, when you don't have a special prime entry book to record, you will always go to where? You will always go to the general journal to record it. Now go to the last one, 18 Jan 21. Okay. So now see 18 Jan. Or owner paid 8,000 to a creditor from his own fund. Discount received is 2,000. Okay, now think and answer. Owner is paying to a creditor. Is the owner having any obligation? Tell me guys, does the owner have any obligation to pay business creditor? No, the owner doesn't have any obligation. But if he pays, what do you call that in accounting? If he pays, what do you call that in accounting? Very good. Additional capital. That's correct. You call that additional capital, not drawings. Not drawings. Business didn't pay to the owner. Owner paid to the business. Okay, owner has paid to the business. So what do you call this? You call these guys drawings. Drawings. Sorry, why did I say drawings? I'm sorry. You call this additional capital. Okay, listen carefully. I'll repeat it again. Owner is paying for business liability or expense. Okay, if you want, I can write it like this here. Okay, when owner pays for business expense or liability, business expense or liability, what do you call this? You call this, guys, additional capital, because owner doesn't have an obligation to pay, guys. But if owner is paying, it's like he's bringing more capital to the business. Okay, it's like him bringing more capital to the business. Where did it go? Wait a minute. I don't know what happened. Okay, fine, here. Okay, so then guys, after that, next one, we can say if business pays for owner's expense or liability. Now, owner's personal expense or liability, if the business is paying, this is what you call as drawings. This is what you call as drawings. I hope you all understood the difference. Okay, I hope you all have understood the difference. When business is paying for owner, it's drawings. When owner is paying for business, it is additional capital. Guys, here, owner is paying for business expense or liability. You say this as the additional capital. Additional capital. So now see, guys, what happens? Now see the creditor. you're paying to the creditor. When you pay to the creditor, your liability reduces by 8,000. Not only that, there is a discount received. Okay, there is a discount received. How much is the discount received? The discount received is 2,000. Discount received is an income. Income increases, due to that retained earnings will increase. Income increases, guys, due to that. What happens? Your retained earning also increases. Your retained earning also increases. And then after that, what happens to creditor value? Can you all think and answer? Tell me, by how much will creditor increase or decrease? By how much? Quickly answer, guys. Is it by 8,000, 10,000 or 2,000? The creditor changes. Think and answer. Got the answer? Let's see if your answers are correct. Okay, some of you all say 8,000, some of you all say 10,000. Be careful, guys. They are telling here, owner paid 8,000. Owner paid 8,000. That means owner has fully paid 8,000 to the creditor. Okay, so owner has paid how much? 8,000. Not only that, he has also received 2,000. Always, when you record under creditor, you will always record what amount? You will always record what amount, guys? The settled amount. Okay, you will always record the settled amount. Settled amount includes two items. What are they? One is the cash and the other one is the discount. Okay, when you record in the trade payable or trade receivable, you will always go and record what amount? You will always go and record the settled amount. Settled amount includes two items. What are they? The cash and discount. Cash and discount. Okay, so now they say cash is 8,000. Cash 8,000. If cash is 8,000 and discount is 2,000, settled amount is going to be how much? Settled amount will be 10,000. So you will go to your trade. You will go and record how much, guys? You will record 10,000, not 6,000, not 2,000, not 8,000. It's always 10,000. Settled amount includes cash and discount. Cash plus discount. If cash is 8,000, discount is 2,000, your settled amount is going to be 10,000. The students who told the answer 6,000, 2,000, 8,000, are you all clear? Remember, your settled amount is what you go and record under creditor. Okay, so that means, guys, your liability will reduce by how much? Your liability reduces by 10,000 due to trade payable. Others, are you all clear? If the students who gave the wrong answer, please quickly let me know if you all are clear or not. If you all are not clear, I can explain once again. Okay, settled amount includes two items. One is the cash and the discount. Okay, so cash is the amount you pay here because it's trade payable, and discount is what you get. So totally you're settling 10,000 worth of trade payable. So your trade payable reduces by 10,000. What is the reason? One is due to discount and the other one is due to cash pay. But now you know we didn't pay the cash. You all know, guys, we never paid the cash. Who paid the cash? The owner. Owner paid the cash. So because of that, don't go and reduce your cash here. Don't go and reduce your cash here because we didn't pay. Why should you go and reduce the cash if we haven't paid? Okay. So because, guys, we didn't pay, then what will you go and reduce? What will you go and reduce? Or what will you go and increase? We didn't pay. The owner only paid, guys. Owner only paid. What will you go and reduce or increase? Yeah, it's an additional capital. If it's an additional capital, what happens to your capital? Your capital is going to increase. Very good. On is bringing additional capital 8,000. Okay, on brings additional capital. How much? On is bringing additional capital 8,000. So if on is bringing additional capital 8,000, your capital will increase. Your capital will increase by 8,000. Your capital increase by 8,000. What is the source document for the last transaction? What is the source document? Additional capital bought by the owner. What's the source document? Think and answer. Guys, here he's not bringing cash. You can't say cash. The students who said cash, listen carefully. On is not bringing cash directly to us. On is not bringing cash directly to us. So you can't say it's cash. You can't say. Why? Because on is not bringing us cash. Here, guys, owner is taking his money and directly paying to a creditor. He's directly paying. So guys, you don't have anywhere to record this. Then you have to record in the journal voucher. You don't have anywhere to record. Go and record it in the journal voucher. Understand that owner didn't bring cash directly and give it to us for us to record it as a receipt. Yes, I understand when owner brings cash to the business, it's a receipt for us. But in this situation, he didn't give us money. He just took his money and directly paid to our trade payable. He didn't come and we didn't see the money here, guys. He directly paid to the trade payable. So we don't have to record, we don't have anywhere to record this transaction. So yeah, we will go and record it in general journal. So the source document is journal voucher. Journal voucher. Now, guys, let's get the total. I think this is wrong here. Let's get the total one by one. We will get two answers here. We have to get two answers. Wait. What's the answer? What's the correct answer? Is it the fifth one or the... Just you all also count and see, okay? There might be addition, subtraction mistake. What's the answer? Oh, wait. They have given the open, sorry guys, wait. The question we didn't read properly. Yes, the balances, now only I also read the balances of the accounting equation. Closing date is given, guys. The closing date of the accounting equation is given. Okay, that's a mistake. Yes, I'm sorry. Just now, thank you. I don't know who told that. Wait. Yes, Shimbra, thank you. They are asking, guys, the opening balance. They have given us the closing balance and they are asking us to find the opening balance. Okay, they have given the closing balance and they are asking us to find the opening. They're asking us to find the opening. So yeah, this is a mistake. We have to do it again. I'm sorry, guys. We'll just take it quickly. Okay, now they have given you, they are telling, guys, these are the closing balance. Check the date properly. They say these are the closing balance. 31st January is the closing date. So they say, guys, these are the closing balance and they are asking you to find the opening. That's the question here. They are asking you to find what is the opening balance. So you have to go backwards and find how much is the opening. You have to go backwards and find how much is the opening. Okay, so this plus this minus plus minus will give you 350,000. So then guys, you have to find how much is the opening balance. You have to go backwards. So 350. So if it is minus, you will add. Okay. And if it is again, if it is addition, you will deduct. Okay. If it is minus, you will add. Like that, you have to go backwards, guys. You have to go backwards. You will get the answer. So that is going to be 334,000. How much is that? 334,000 will be your asset value. Opening date. They are asking you the opening balance, guys. Now see capital. How to find the opening capital? So closing is 200. If you deduct the additional, you will get the opening. Go backwards. If it is addition, you deduct. You do the opposite. You will get the opening balances. You will get the opening. Now see liability. Closing is 80. You add back the 10,000. You add back the 4,000. You get the opening. Opening is going to be 94,000. Again, go to retained earnings. 70,000, guys. And then guys, you have to deduct 2,000, and then you have to add back 10,000, deduct 30,000, you get the opening. That is 48. What's the correct answer? The correct answer is fourth one. See guys, this is how they will do you for your in the exam. They will try to change the question a little bit. Y'all will not think like what we did now. We didn't feel like that we are doing something wrong, right? We thought, okay, we are doing everything correct. We are going to get it correct. But to see, we didn't read the question carefully. They had asked us opening balance by giving the closing. It was a different question. Usually they don't test like this, right? They have given the closing and they are asking you to find the opening. You understand? So for that, guys, you have to go backwards. You have to go backwards. And this is the answer which you're looking for. This is the answer which you are looking for. So guys, the correct answer is going to be fourth one. Correct answer is what? Fourth one. Okay, so be very careful, guys. First of all, read the requirement carefully. If not, we will make a mistake. Okay, now go to the next one. What's the correct answer for the third one? Sales invoice, credit now, note, journal voucher, and journal voucher. Answer is first one. So the third one, guys, answer is first one. Second one, answer is fourth one. Answer is fourth one. Now go to the next one. The values of net profit. Okay, let's go to the next one. The values of net profit and increasing net asset to the above transaction. So guys, the change is in retained earnings is going to be the profit figure. The change in retained earnings during the year will be the profit. How much is the profit? How much is the profit? The change. Calculate the change. What is the change? 70,000 is closing to retained earnings. Opening is 48. What is going to be the profit for the year? Profit for the year, very good, 22,000. Guys, remember, in retained earnings only, you go and record the profit. So the difference is going to be the profit for the year. You take the closing, deduct the opening retained earnings, you will get the profit. You will get the profit. So profit is 22,000. Profit is how much? 22,000. Now they're asking what is the net increase in net asset? Increase in net asset. Net asset is the addition of capital and retained earnings. Okay. Net asset is the addition of what? Addition of capital and retained earnings. Capital plus retained earnings is the net asset. Net asset means, guys, equity. Net asset means equity. So addition of capital and retained earnings is what you call as the net asset. Okay. So what's the total of net asset? Opening net asset is 240,000. Opening net asset is how much? 240,000. And then now you know the closing net asset. We found that they gave us the closing. Closing is 200 and the retained earnings closing is 70. So then guys, what is the closing net asset value? Closing net asset is going to be 270,000. 270. So what is going to be the change? What is going to be the change? Yes, what's going to be the change? What's the change, guys, between these two? That is going to be your increase. That's going to be your increase. Very good. So what happens to your net asset? Your net asset has increased by 30,000. What happened to your net asset? Your net asset has increased by 30,000. Your net asset has increased by 30. Okay, even you can do another way. That is also same. You find this different, add it with this different. That is, this difference is 8,000. No, okay, and this difference is how much? 22. So that is going to be 8 plus 22, same thing, 30,000. So answer for fourth question is third one. Answer for question number 4 is going to be the third one. It's going to be the third one. Now go to the next one. Are you all done writing everything, or should I give you all time? Are you all done? Or should I give time? Quickly tell me before we go to the next one. Okay, great. Now go to the next one. Now see, details related to credit purchase of a business are as follows. They have given the following details related to what? A credit purchase. Now see, total credit purchase invoice is 600,000. They say the total credit purchase is 600,000. Trade discount is 20%. That is 20%. Select the answer which shows the correct value. Which shows the correct value with related to accounts. Okay. So now, guys, there is trade discount. There is VAT. Tell me the order. Tell me the order. I want you all to tell me the order. After you have a credit purchase, guys, will you first of all deduct the trade discount, or what will you do? What are you going to do first thing, or add the VAT? Yeah, first you have to. Others, what do you all think? Quickly tell me. What do you all think? What is the first thing you have to do? Yes, deduct the trade discount. Guys, the first thing you have to do. The first thing you have to do is deduct the trade discount. Okay, that you have to deduct the trade discount, because you know trade discount is not accounted. You don't have trade discount double entry. The first thing you have to do is, out of this 600,000, okay, out of this 600,000, you know there is a trade discount of 20%. Trade discount is how much? Trade discount is going to be 20%. Okay, 20%. So that is how much, guys? How much is the trade discount? How much is the trade discount? The trade discount is 600,000 into 20%. That's going to give you 120,000. Trade discount is 120. Yeah, Nazifa, they always say, now I have seen, guys, the questions where they use the word invoice. So they try to say that as the list price. Okay, even, yeah, that is not the correct way to do, but I don't know why they do that. They always say the invoice is like the list price. Okay, you also assume like that, unless they say trade discount is already deducted. Just assume this invoice is like the list price. Okay, just assume like that. Now let's go to the next one. Now see, guys, then what is the purchase value? What is the purchase value? 600,000 minus. So the list price is how much? List price was 600,000. Okay. You deduct the trade discount, you will get the purchase value. What is the purchase value? Purchase value is going to be 480,000. Now see, guys, 480,000. Now there is a VAT. How many percentage VAT? VAT is 20%. So what is going to be 20% of this? 20% is VAT. So find out, that's going to be 96,000. Is that 96? Yes, 96,000. So guys, if you don't follow the order, you're going to get the answer wrong. Remember, from the list price, the first thing you have to do is deduct the trade discount. From the list price, the first thing you have to do is, guys, deduct the trade discount. So if you deduct the trade discount, then you will get the correct purchase value. After that, what you can do, guys, you have to add the VAT to find how much you have to pay to the trade payable. How much you have to pay to the trade payable, you have to find with VAT. Because guys, you're not just going to pay the purchase value, you will pay with the VAT. You have to pay including VAT. So what is the payable amount? What is the total amount you have to pay to the trade payable? The total amount you have to pay to the trade payable is 576,000. Okay, I'll repeat it again. Always the purchase value will always be excluding VAT, without VAT. Okay, so then guys, after that, to find how much you have to pay to the trade payable, what is the amount you have to pay to the trade payable, for that guys, you will always include that. So this value will always be including that. Okay, and this value will always be exclude VAT. Okay, so now see guys, how much is going to be your purchase value? Your purchase value is 480,000. What is your trade payable value? 576,000. What is your VAT? 96,000. So that is going to give you answer the second one. That's going to give you second one as the answer. Are you all clear? Are you all clear? Yes, very good. So Afka has given the double entry also. Purchase account debit 480, VAT account debit 90, trade payable credit 576. Okay, so if you all want the double entry for this, the double entry will be, guys, purchase becomes debit. Purchase becomes debit by 480,000. Okay, and then where do you debit? The VAT control, because when you purchase, you call this as input VAT. VAT control becomes debit by how much? 96,000. And then where will you credit? The trade payable will be credited by 576. Trade payable will be credited by how much? Your trade payable becomes credited by 576,000. So the correct answer is second one. Okay, now go to the next one. Now see, information related to the petty cash of a business is as follows. So they have given you opening petty cash, closing petty cash, reimbursement. See the dates properly. Okay, 1st of January, 31st January, reimbursement is done on 1st of January. Okay, so if petty cash in reimbursement is increased by 2,500, what is the reimbursement value on 1st of February? Now guys, you see the petty cash balance is how much? 2,000. Sorry. Okay. Now see guys, the opening petty cash is 4,000, closing petty cash is 2,000. Okay, so there is a reimbursement. There is a reimbursement of 11,000 on 1st of Jan. They are asking you what will be the reimbursement if the petty cash increase, the interest is increased by 2,500. Okay. What will be the reimbursement value? Now see what's the closing. First of all, can you all find me the interest? Can you all find me how much is the interest value? You all can find from 1st of January. Tell me guys, how much is the interest before the increase? Before the increase, how much is the interest? Think and answer. Now see, I'll tell you all. Now see the 1st of January 21. Okay, 1st of January 2021, there is an opening balance of 4,000. At the same day, you're making a reimbursement. At the same day, you're making a reimbursement of how much? Of 11,000. My question is, how much is the interest value? How much is the interest value before the change? The interest is going to be very good, 15,000. Guys, the interest is 15,000. Guys, don't just give me values. Please think a little before you answer. Okay, how did I get 15,000? At the starting date, you had 4,000, and then after that, they have reimbursed 11,000. So, what is the interest value? The interest value is going to be 15,000. 15,000 will be the interest value. Now they say if the petty cash reimbursement increased by 2,500, what is the reimbursement value on 1st of February? Now guys, interest is 15,000, right? Interest is how much? Interest is 15,000. So now they are asking you, okay, what if it increased by 2,500? What's the new interest value? What's the new interest value? What is the new interest value? This plus this, the new interest is 17,500. Now at the closing date, January closing date, how much you have? You have closing balance, guys. You have closing balance of how much? 2,000. Then how much will you ask more? How much will you reimburse? If you have a balance of 2,000, how much are you going to reimburse? You're going to reimburse the remaining. The new interest is 17,500. Okay, the new interest is 17,500. Out of that closing date, if you have 2,000, how much will you ask more? You will ask 15,500 more. So your reimbursement is 15,500. I'll repeat one more time. Listen, how to find the interest. Okay, so if you want, guys, I don't know whether I showed you all that equations. How to find interest is you can take the opening balance, at the reimbursement, you will get the interest. Opening date, they said 4,000 is the balance. And then they say, guys, the reimbursement on the same day itself is 11,000. So that is how much is the total interest? 15,000. Okay, you had 4,000 1st of January, you reimbursed 11,000. So totally your interest is 15,000. But then they say, guys, if they should have told if petty cash interest is increased by. If petty cash interest is increased by 2,500, your new interest is going to be 17,500. If your new interest is 17,500, then you should see how much do you have now? You have 2,000. Then how much will you ask more to get 17,500? You will ask another 15,500 more, so that you get 17,500. Clear? You need 17,500. But you have only 2,000. How much will you ask? You will ask 15,500. So answer is third one. Yeah, Nazifa, there are different ways to do. If we add 2,500 with the expense 13,000, it's 15,500. Is it correct? Where did you find the expense? Okay. 13,000. So for that also, dear, you have to find the interest at first, right? For that also, you have to find 15,000 at first for you to do that. Am I right, Nazifa? Okay, so yeah, that is also correct. Whatever, that's also correct, but both are same. Okay, there are different ways you can get the answer. So the third one is the correct answer. Now let's go to the next one. Okay, seventh one. Now they are asking, select the answer which contains the value of adjusted cash control balance and bank statement balance respectively. So it's not difficult here. They are just giving you to find, you have to draw the adjusted cash control and the bank reconciliation. You will get the answer. Okay, so let's quickly do that. Just draw a adjusted cash control. and then draw a bank reconciliation statement. Okay, so I'll say here adjusted cash control, and then guys draw a reconciliation. I think we have one here. No. Okay, so this should be bank reconciliation. Guys, for your part 1 question, don't waste your time drawing formats very beautifully. There is no marks for your drawing formats and all in part 1. Just marks only for getting the final answer. So make sure you don't waste time. You do as fast as possible. No matter you show the workings in your answer script, you're not going to get marks for the workings. For part 1, your final marks only will get the answer. For example, let's say guys, in the workings you have found out 15,500, but by mistakenly you click the answer as 2,000, you won't get any marks, okay, for the working. So don't waste your time writing the workings in the papers. I have seen some students, they take after they find it from another paper, they will write it in the answer script, all the workings for part 1. Guys, you don't get marks. Don't waste your time. You get marks only your final answer. So don't waste time trying to make it beautiful. They are not going to give marks for anything. Okay. Now let's see. Cash control account of N business was 140,000. Okay, so they are telling cash control is 140,000 on 13th March 2021. So that means guys, cash control balance becomes adjusted cash control opening balance. How much is that? 140,000. 140,000. Okay, so then let's continue. Then after that, they have given you unpresented checks. Unpresented checks should be added. Unpresented, okay? Remember P. Unpresented P. P should be added, okay? So yeah, you add it. So this is how you have to remember. P. Addition. Okay. So then guys, unrealized checks should be deducted or reduced. Unrealized checks, you have to deduct it. Remember, R is for reduce. Okay. So then after that, you can put here unpresented is 16,000. Unrealized check is 20,000. 20,000. So then after that, direct deposits of debtor not recorded. Omission, it's an omission. Direct deposit not recorded, it's an omission, guys. When there is a direct deposit, our cash balance increases. So go to your cash control and add it. Our cash balance increase. Go to your cash control and add it 4,000. 4,000. Okay, then let's continue. Dividend collected by bank 6,000 and electricity charge paid by bank 3,000 on standing order, and bank service charge is 2,000. Dividend collected by bank, guys. Dividend is collected for us by the bank. It's going to increase our bank cash control. So dividend is 6,000. Okay. Electricity charge paid by bank based on standing order. So guys, when they pay electricity, what happens? Our cash control will reduce. We don't know. We are waiting till we receive the bank statement. That's why we call all this omission. We call them omission because guys, we haven't recorded in the cash control. We are waiting till we receive the bank statement, because the bank statement will be the source document for these omissions. So you will wait till you receive the bank statement, then only you will record them. Are you all clear? So that's why we omit it, because we need a source document to record. These two are timing difference, which is recorded in the cash control, not recorded in the bank statement. That's why you have to record. Okay, then they say, guys, this bank service charge, that is the bank charge. Bank charge will reduce your cash control. That is 2,000. That is 2,000. So guys, we are done. So this was a very easy and direct question. Now get the closing balance. Okay, they didn't ask something difficult here. So yeah, let's get the closing. 145,000 is the closing cash control balance, and then guys you will get the cash control. Take it to the first line. You will get the bank statement balance. How much is the bank statement balance? 141,000. Answer is second one. Answer is second one. Are you all clear? Are you all clear? So just you have to put guys these omissions in the adjusted cash control, and the timing difference you have to put it in the reconciliation. What about errors? If the error is done by the bank, you will put it in the bank reconciliation. If the error is done by the business, you will put it in the adjusted cash control. Okay, if the error is done by the bank, the error will be put in the bank reconciliation. If the error is done by the business, it will be shown in the adjusted cash control. Okay, so remember, omissions should be recorded in the cash control because it is not yet recorded. It is not yet recorded. Why don't we record omissions, guys? Because we are waiting till we receive the bank statement. You will receive the bank statement at the month end. After the month end only you receive the bank statement. So you're waiting till you receive. So that's why we call it as an omission. Okay, so because of that, it's not recorded in the cash control. So now what you should do, you have to record it in the adjusted cash control because it's not recorded in the cash control. Timing difference, they are recorded in the cash control but not recorded in the bank statement. Any problem related to bank statement will be recorded in the reconciliation. I hope you're clear now. Okay, now let's go to the 8th question. Okay, so they are asking, select the balance of suspense account generated in the trial balance. So they are asking the opening balance of the suspense account, that is the trial balance value. So what you have to do, guys, you have to correct these errors. You have to correct these errors and then open suspense account. Okay, first of all, let's open a suspense account. Quickly do that. So what is the requirement? The requirement they are asking you is, okay, we will, even though we will do a bit further, but they are asking, guys, in the requirement, they are asking you the trial balance value. It can be in the debit side, it can be in the credit side. We don't know. We don't know. Unless we correct these errors, we will not know. Okay. Now let's see. Now see, guys, they say the debit balance of the cash account 9,000 was recorded in the credit column of the trial balance. My question for y'all is the cash account correct or wrong? Due to this error, is the cash account correct or wrong? Quickly answer me. What do you think? I want everyone's reply. What do you think? Is the cash account correct or wrong due to this error? The students who say it's correct, why? Why do you say it's correct? They are telling no, they have put it in the wrong side. Why did you say it's correct? Why? That's my question. Why do you say it's correct? Can anyone answer? Y'all can even unmute if y'all want. Okay? Y'all can even unmute if y'all want. Yes, very good, Afra Azhar. It's a trial balance error. Correct. Amana, Amir, correct. Guys, it's just a trial balance. This is a special type of error, guys. It's a special type of error. Understand that your cash account has no problem. Your cash account has no problem. The only problem here is your trial balance. When you extracted to the trial balance, you made a mistake. Then you should understand your cash control has no problem. Because guys, they didn't say your cash account is wrong. They said the trial balance is wrong. So then guys, that means the cash account is 100% correct. The only problem is the value. When you took it to the trial balance, instead of recording in the debit side, you went and recorded in the credit side. Instead of recording in the debit side, what did you do, guys? You all went and recorded in the credit side. So that's the mistake here. That's the mistake here. Okay. Wait a minute. I'll explain like this. I think it's better. Okay. Now see the debit balance of the cash account 9,000 was recorded in the credit column. Okay. So what the problem is, guys, you should record when there is a cash balance, positive balance, you should have debited to where? You should have debited to the trial balance 9,000. Okay, this cash value, what you should have done, guys, in the trial balance, you should have gone and debited by 9,000. Now, do you understand? Cash has no problem here. Your cash is 100% correct. The only problem is when you extracted to the trial balance. That's the mistake you did. You understand? So cash is a debit. It should be debited to trial balance 9,000. But the mistake they did was went and credited in the trial balance 9,000. Okay, instead of debiting it, what they did was they credited. Guys, the first thing you should do is cancel the mistake. What's the mistake you did? You credited the trial balance by 9,000. That's the error you did. So now to cancel it, what will you do? You will make the opposite. You will debit the trial balance. You will debit the trial balance by 9,000. See guys, you cancelled it. Because they credited it, which is wrong. You cancel. Now, after you cancel the wrong one, you have to write the correct entry. What's the correct entry? Trial balance should be debited by 9,000. The correct entry is trial balance should be debited by 9,000. So, in total, how much should the trial balance be debited? In total, the trial balance should be debited by 18,000. If the trial balance has to be debited by 18,000, where do you credit? Because in correction of error, there should be a debit as well as a credit entry. Where do you credit? Very good, guys. You don't have anywhere to put. You don't have anywhere to put. You will go and put it in the suspense. So guys, you will say for trial balance error, we don't say trial balance debit. We say ... Usually guys, we do like this. We said ... debit 18,000, and then this is a special type of error, guys. Suspense becomes credited by 18,000. This is the correction of error. Usually we don't say trial balance debit. Okay, we don't do that. We say, guys, ... debit 18,000. Suspense account is credit by 18. Now let's go and record. So guys, see, this is how you will correct the error. You will say here, you can write that down, guys, because it will be useful for you. In bracket, you can say cash, but you can't write it in, you can't say cash debit, okay? That's wrong, because you know cash account has no problem. Your cash account is correct. So that's why we just put it in the bracket. So anyone reading this will understand better. Okay. But you can't put it as cash debit. Your answer will be wrong. Now suspense credit. No, go to your suspense and credit. You can say ... cash 18,000. You can record like that. Okay. Suspense is credited. Are all clear? Quickly note it down. So we can go to the next one. Anyone having doubt there? Anyone having doubt there? You can ask me, no worries. Okay, so fine. Now let's go to the next one. Yeah. Credit note. When you hear the word credit note, what comes to your head? Credit note. What comes to your head? Hello? When you hear the word credit note. Very good. Return inwards due to a credit sale. Before you made a credit sale, now it's returning inwards. That's why. Why? Because the source document of return inwards is credit note. Credit note in relations to goods returned by Kamsha, rupees 24,000 was recorded in return inwards journal as 2,400. Guys, there is a sales return. Can someone tell me the double entry for sales return? Anyone? What's a double entry? Quickly. Yes? Return inverse debit, trade receivable, credit. Now the problem is, guys, when they went and recorded in the source document, they recorded it as 2,400. No, sorry, when they recorded in the prime entry book, they recorded it as 2,400. Okay, it should be 24,000, but they went to the prime entry book and they recorded it as 2,400. My question for y'all is, tell me, is only one ledger account wrong or both wrong? Is only the return inwards account wrong or both return inwards and trade receivable? Is return inwards wrong or both return inwards and trade receivable? Think and answer. What do you all think? Why do you say both? Why do you say both? There should be a reason you all saying both, right? Why? Why do you think both are wrong? Why? Yeah, very good, Nazifa. Since prime entry book values only you take it to ledger. Guys, see the process. See the accounting process. Transactions. The first place you record transactions is the prime entry book. The first place you record the transaction is prime entry. So there is a sales return. The sales return is 24,000. But you go to the prime entry book and record it as 2,400. Now, guys, this prime entry book, after you're done, you will take it to the ledger account based on the double entry system. You will take it to ledger account, guys, based on the double entry system. Since you recorded in the prime entry book an incorrect value, your ledger account is also wrong. Since you recorded an incorrect value in the prime entry book, because of that, your ledger account is also wrong, because the total of the prime entry book only you take it to ledger accounts. Because the total is wrong, why? Your source document was wrong. So that means, guys, you should understand both are wrong, not only one, both ledgers are wrong. Both ledger. Now tell me, guys, is it understated or overstated? Is it understated or overstated? Understated. By how much? By how much is it understated? 24,000 you recorded as 2,400. By how much was it understated by? 21,600. It was understated by 21,600. To correct an error, understated, same side or opposite side? Understated, same side or opposite side? When you want to correct an error, if it is understated, guys, remember, if it is understated, it is same side. If there is external students who don't know this, please take a screenshot, okay? And this is the way you can easily get an answer to correct an error, okay? So guys, the other one, if it is understated, you will correct the mistake by recording it in the same side. If it is overstated, you will correct the mistake by recording it in the opposite side. So guys, here it is understated. So if it is understated, you will record it in the same side. Because both ledgers are wrong, will it create a suspense account? Because both ledger accounts are wrong, guys, will it create a suspense account? Yes or no? No, it is not going to create a suspense because both ledgers are wrong. This is an error. What do you call this error? This is error which does not affect the trial balance. This is an error which does not affect the trial balance. That is why it is not creating a suspense account. That is why it's not creating suspense. So all you have to do is just record the double entry. Because same side, right? It was understated. Same side, you can say return inwards debit 21,600. Okay, and then you can say trade receivable credit. Trade receivable will be credited by how much? 21,600. This error will not create a suspense account. This error will not create a suspense account. Clear? So guys, if you haven't found out that it will affect both ledgers, your answer will be wrong. Why? Because you should understand the first place you record is a prime entry book. Okay, so from the prime entry book, only you take it to ledger account. If your prime entry book is wrong, your ledger account is wrong. That means both ledger accounts are wrong because the total of the prime entry book is taken based on the double entry system. The total of the prime entry book will be taken based on the double entry system. Okay. Now let's go to the next one. Total of the discount column of cash payment journal. Cash payment journal discount column is discount allowed or received. Cash payment journal discount column is allowed or received. Very good. Discount received, not allowed, not allowed. Who gives us discount? Who gives us discount? Trade payable gives us discount. So because you pay money to the trade payable, only you get discount. So when you pay money to the trade payable, you record it in the cash payment journal. So the discount is going to be received, not allowed. The student who told it's allowed. Are you clear now, dear? Are you clear? Be careful. You all can make mistakes even though you know the correct answer. Are you clear? Yeah, that's what I said. You all can make mistakes even though you know the answer. So that's why you should be very careful in your final exam. You might know everything, guys. I'm not scaring y'all, okay? I'm telling y'all to be concentrate more when you're doing the paper. You might know everything. You might know correctly to do this, but in your final exam, you might do silly mistakes. That's the worst part. After studying so much, you go to the exam and make silly mistakes. Okay, so that's why be very careful when reading the question. So to reduce your mistakes, that's what I always tell, make sure you underline the dates. Or guys, if you haven't done anything, okay, even if you haven't done this adjustment, put a big circle and keep so that you remember to do it later. If not, guys, due to the tension, you will forget everything. You will forget. So that's why you should make sure you are very prepared for the exam. Okay, don't just go, okay, in that time I can remember, that time I will be able to adjust it. No, guys, you have to prepare now like you're going to do the exam tomorrow. That's how you should be prepared. You should prepare yourself. Clear? Now see, this is discount received. 7,600 was debited in discount allowed account and no any other entry has been made. No any other entry has been made. So now tell me, discount received, what is the correct double entry for discount received? What's the correct double entry, guys, for discount received? What's the correct double entry? Anyone? Y'all can unmute and tell me if you want. Trade payable debit, discount received credit. Discount received is credit. This is the correct double entry to record discount received. That is 7,600, 7,600. What is the mistake they have done? How have they recorded? Anyone? How have they recorded? Tell me the mistake they did. Yes, they debited to the discount allowed. They debited, only went and debited the discount allowed. Guys, they went and debited discount allowed by 7,600. This is the mistake they did. Okay, the correct entry should be, guys, trade payable debit 7,600, discount received credit 7,600. The mistake they did was they just went and debited the discount allowed by 7,600. That is what they did. Now what you should do, first of all, you have to compare. Okay, you have to compare and see if anything is correct. I told you all you can follow this step to get the correct answer. Okay, see this step. Okay, first one, you will write the correct double entry. What's the correct double entry? Trade payable should be debited, discount received should be credited. But what is the double entry with error? They went and recorded it as discount allowed this debit. That is the error. Now what you have to do, compare and see if any entry is correct. Guys, is there anything here which is correct when you compare? Compare and tell me, is there anything here which is correct? No, nothing is correct. How do you say trade payable is correct? They said no, any other entry was made, right? They said no, any other entry was made. So have they recorded in the trade payable? Have they recorded in the trade payable? They said, guys, specifically they said no, any other entry was made. So that means have they recorded in the trade payable? No, they haven't recorded. So now tell me, compare and tell me, is there anything which is correct here? Is there anything which is correct here? No, right? Nothing is correct. Nothing is correct. Now you have to cut. Then the next step is cancel the incorrect entry. What is the incorrect entry here? What is the incorrect entry? Discount allowed is debited, which is wrong. Discount allowed debited is wrong. So to cancel it, what you will do? You will credit it. You will credit discount allowed. Guys, discount allowed debit is wrong. To cancel it, you will credit discount allowed. You will credit discount allowed. Then what you will do? Record the correct double entry. What's the correct entry? The correct entry should be, guys, trade payable is debited 7,600. Discount received is credited 7,600. This is the correct entry. Now, guys, where is the double entry equal? Compare, check and tell me, is the double entry equal? That means, is the debit side equals to the credit side, or is there a difference? Check and tell me, is the debit side equals to the credit side, or is there a difference which you should transfer to suspense account? Is there a difference which you should transfer to suspense account? There is, right? There is. The credit side is bigger than the debit side. Okay, there is a difference. The difference should be transferred to suspense account. What is the difference? 7,600. How do we know? Because, guys, our debit side should equals to the credit side. Our debit side should equals to the credit side. Then we found out there is a difference. You know, the double entry debit and credit should be equal. The difference will be transferred to suspense. Go to your suspense account. You can go to your suspense account and you can debit it. Okay, you can debit and you can say, guys, discount allowed. That was the mistake, right? They went and recorded it as a discount allowed. So go and say it's discount allowed 7,600. Okay, so that is done. Now go to the next one. Now see the last one, bad debt 4,000 was recorded only in the related control account, but in controversial side. Okay, so they say, guys, there was what? There was a bad debt. Can someone tell me bad debt? What is the double entry for bad debt? What is the correct double entry for bad debt?
Bad debts debit, trade receivable credit.
Very good. Bad debt is debit, trade receivable is credit. Bad debt becomes debit, trade receivable becomes credit. This is the correct double entry for bad debt. Okay. But they have done is they have gone and recorded where? They have recorded in the control account. That means, guys, they have done is they have gone and recorded in the trade receivable. But which side have they recorded? Which side have they recorded? Debit or credit side? The correct one should be credit side. Which side did they record? They say they recorded in the opposite. Here they say they recorded in the opposite side. Even though it should be credit side, they went and recorded in the debit side 4,000. They went and recorded, guys, in the debit side as 4,000. Do you all understand what they are trying to say? Now, see, you have to compare. Let's follow the steps for you all to understand better. Okay, let's follow these steps. Where is that? Okay. Now, see, you can follow this step, guys. See, write the correct double entry. Correct double entry is bad debt debit, trade receivable credit. Write the double entry with the error. What is the double entry with the error? Trade receivable has been debited, which is wrong. Okay, compare and see if anything is correct. Guys, is there anything which is correct here? Is there anything which is correct here to compare? When you compare, sorry. No, nothing is correct. No, nothing is correct. Trade receivable has been debited. It should be credited, guys. So nothing is correct. Then go to the next step. Cancel the incorrect entry. What's the incorrect entry? Trade receivable is debit, which is wrong. To cancel it, you will credit the trade receivable. Trade receivable debit is wrong. Now you cancel it by crediting the trade receivable. Now after that, record the correct entry. What's the correct entry? Bad debt debit, 4,000. Trade receivable credit, 4,000. Now tell me, guys, by how much is the trade receivable credited by? By how much will the trade receivable be credited by? Bad debt becomes debit 4,000. Bad debt is debited by 4,000. Trade receivable becomes credited by how much? Not by 4,000, by 8,000. Trade receivable becomes credited by how much? By 8,000. Now, where does the difference goes to? Because you know debit and credit should be equal, but here it's not equal. Where will you record the difference? Suspense account. Go to your suspense account and debit the difference. Okay, we can say suspense debit 4,000. 4,000. Okay, so now record your suspense account. What will you say? Trade receivable. You will say, guys, trade receivable. Okay, so that is 4,000. This was a bit complicated question. I'll tell you all the truth. I mean, it was not direct, guys. Yeah. So now let's find the answer. The difference will be the answer. I hope there is an answer for this. Let's see. Is there an answer? No, right? 81. Why? Did we make a mistake? Just go through it, guys. See whether we made a mistake there. Let's go through it and see if we have done any mistake there. Debit balance of the cash 9,000 was recorded in the credit column of the trial. Okay, we'll check the last one. That, yeah, I think the last one is the problem here. We'll see. Bad debt 4,000 was recorded only in the related control account. but in the controversial side. So yeah, that means bad debt was recorded. Yeah, the controversial means opposite. Wait a minute. The opposite side. Okay. They say bad debt. No. Bad debt. They didn't tell that they recorded. They didn't tell that they recorded the bad debt, right? They said bad debt rupees 4,000 was recorded only in the related control account. So that means they have recorded only in the control account. They haven't recorded in the bad debt account. That's what they are trying to say, right? That's what they are trying to say. They recorded in the control account, but they haven't recorded in the bad debt account. I think that is the problem there. I think they are trying to say bad debt 4,000. Bad debt 4,000 was recorded in the control account. They shouldn't have used the word only. So if they haven't done that, we can take it like this. I mean, if they haven't done that, guys, I think there's a mistake in the wordings there. So then that should be 8,000. If it is 8,000, wait, okay, don't change anything. I'll see. Yeah. Fifth one is the correct answer. Fifth one is the correct answer, but they shouldn't have used the word only here. Bad debt 4,000 was recorded only in the control account. They say they recorded only in the control account. So that means, guys, if they have recorded only in the control account, okay, if they have recorded only in the, do you all understand? If they have recorded only in the control account, see, guys, last one, see, bad debt, what is the correct double entry for bad debt? The correct double entry for bad debt is bad debt becomes debit. Bad debt will be debited. Okay. And where will you credit? You will go and credit your trade receivable. That is right, right? That is the correct thing you will do. What's the value? 4,000. 4,000. What have they done? Okay, so they have done is they have gone and recorded in the related control account, but in the controversial side. That means, guys, they say only. That means they are trying to say they didn't record in the bad debt account. Do you all agree with me? They are trying to say they didn't record in the bad debt account because they say only in the control account. So that means they have recorded in the trade receivable only. And which side have they recorded? Opposite, in the debit side. It should be recorded in the credit side, but they recorded in the controversial side, means the opposite side. They have recorded in the debit side. Do you understand? Now, if you compare, nothing is correct here. Everything is wrong. The first thing you can do is, guys, if you compare, the first thing you can do is you can cancel the wrong one. The wrong one is, guys, trade receivable. Debit is wrong. So to cancel it, you will credit your trade receivable. By how much? By 4,000. By 4,000. And then after that, you will record the correct entry. What's the correct entry? Bad debt debit 4,000 and trade receivable is credited by 4,000. Okay, that is going to be trade receivable credit 8,000. No, there should be suspense because see, you are crediting trade receivable twice. One is here, okay, and the other one is here. So you're crediting trade receivable twice. So that's why suspense account is there. Are you clear, Amir? Are you clear? Why am I saying suspense account is there? Because first of all, you have to cancel the error. The error is trade receivable debit. So to cancel it, you will credit it once. And then to record the correct one, you will credit it again. So that's going to be twice. That's going to be 8,000. And bad debt, they haven't recorded yet. So that's going to be bad debt debit 4,000. Guys, there is a mistake in this question actually. You all understand that, right? So it should be the correct one is the previous one which we found out. We'll just stick to that, guys, because if not, they shouldn't have used that word. Okay, if not, they shouldn't have told only. They should have told bad debt was correctly recorded, only the control account is wrong. They should have told that. Okay, but they say only in the control account they recorded. So that means, guys, the question is wrong. Either they should have given the answer as 6,400 debit, but the answer script, they say fifth one is the answer, where they have considered the bad debt is already recorded. But in the question, they doesn't say bad debt is recorded. You understand? So yeah, that's a mistake there. So guys, we stop it here. I hope you all are clear of whatever we did today. Okay, we stop it here. That's it for today. Take care. Study well. Bye-bye.